Greetings and welcome to Lake Resources Webcast. It is now my pleasure to introduce your host, Mr. Steve Promnitz, Managing Director. Please go ahead, sir.
Good afternoon, everyone. As mentioned, I'm Steve Promnitz, Managing Director of Lake Resources. We're listed both in the ASX as well as on the OTC as LLKKF. I'm going to be talking to you today about sustainable high-purity lithium for electric vehicles. And I really appreciate you both listening in live, and then if you're listening to the replay, thank you so much. Lake Resources is focused on delivering something new to the sector. We've all seen electric vehicles getting around, and there's been a heck of a lot more of them on the roads in the last few years. And that's just going to increase, particularly in Europe and China and California. We see electric vehicles everywhere. The energy density in those vehicles continues to improve. They go further. And what drives those is the lithium that goes into the lithium-ion battery. What we're trying to do is produce a high-purity product, which is what the market's after, and also something that's more sustainable and environmentally friendly. So with that, and online I also have Stu Crow, our chairman, when we go through the Q&A session. So we're just moving on to slide 2. This is a standard disclaimer. I leave that for you to read at your leisure, but I will be making forward-looking statements. So on slide 3, this essentially summarizes what we're trying to do. As mentioned, we're trying to produce a high-purity lithium. This is better than 99.9% purity, what we call battery grade. Battery grade comes across a range of types, but one of the key things about battery grade is low impurity, and that's what we're going to be delivering. And the reason we're able to deliver that is we're using a new technology, a disruptive direct extraction technology produced by Lilac out of California. At the moment, when you make lithium out of salt water, imagine a place that looks like Death Valley in California. You pump lithium out from below the surface, and then you concentrate all of the salts using the power of the sun, and then separate the lithium. What we're doing here is we're extracting lithium directly from that salty water, so we don't concentrate any impurities. We use modular units, so they're easy to expand, has a much smaller environmental footprint, and at the moment we've got a pilot plant operating in California, and later in the year on site. It's good to have a new technology, but you've got to be in the right location. It's like buying a house. And essentially, we're in the prime location for lithium brines in the world, what's called the Lithium Triangle. We have a large resource. We have a pre-feasibility study that will be out in the next couple of weeks, and that'll demonstrate that things are economic. We're moving towards development and then into production. It's also important to have people that are familiar both with the sector and also how to operate in country. We've got a team that has done that for many years. And we can see a lot of key catalysts in this particular year. I'm pleased to be part of this MicroCap conference because this year and the coming year are going to be absolute major growth years for Lake Resources. In the next few months, we're going to be getting samples out of our pilot plant to offtake partners. That's going to trigger offtake discussions and financing. And we've recently had research out that shows a 5 to 7 times uplift just in the next 12 months based on us delivering on these guidelines. So moving forward to slide 4, this just shows where we're located. The Lithium Triangle includes Chile and Argentina, and the reason that lithium is produced here is that these are dry salt lakes. The difference is in these salt lakes, there's also a small amount of lithium. For the longest time, they've been producing lithium here in Chile and Argentina. It's about 40% of the world's lithium comes from here, and another 40–50% comes from hard rock production in Western Australia. The 5 largest producers all have operations here: Albemarle, SQM, Livent. They're all listed on the New York Stock Exchange, plus Tianqi and Ganfeng, which are the 2 largest Chinese producers. They all have operations here, and the reason for that is this is the lowest cost area for production. Our Kachi project, our flagship, you'll see down the lower end of the slide. This is the one that we'll release a pre-feasibility study on in the next couple of weeks, and we're moving forward to production. But in the orange circle on the upper part of the slide, these projects here are literally right next to the largest producers. And we're now virtually the only junior that has got any substantive leases with lithium brines right next to either current production or production that's coming at the end of this year. The right location. As I move on to the next slide, we just talked very briefly about demand. Demand continues to increase, and we're looking for a demand increase of 5 to 9 times of the lithium to be produced over the next 8 years versus what was produced last year. Now, doubling production in anything is hard work, but this is really going to be quite a challenge and creates an opportunity for a new player like Lake Resources that has got a new offering. Forecasts are always difficult to believe and to have some credibility. What drives this is the fact that lithium-ion megafactories, the large factories that make lithium-ion batteries for electric vehicles, there was only 3 of those in 2015. Now there's 52 of them, and we're looking for that to go through 90 over the next 5 to 8 years. So substantial demand. Yes, it's been a little bit quieter like everything else with COVID-19 at the moment, but this is just going to drive the demand for more lithium, and particularly for high purity lithium. I mean, if we look back at the last Super Bowl, it seems like a long time ago now, but who would have believed that we would have 3 ads for electric vehicles during the Super Bowl? Now we even have the ultimate macho car, the Mustang, coming out as an electric vehicle. So it's here to stay and here to grow. Now I'm going to quickly move through a few slides talking about our actual project. This is just a quick photo to show you what the Kachi project looks like. As I mentioned, these are just salt lakes, and you can see that lumpy material there next to the vehicle. That's what happens in a salt lake when it gets hyper-arid, and then the salt blocks come up like that. This is our major project, Kachi, and believe me, size matters. This has got serious size. As we look to slide 7, I show a slide here that our lease holdings, our acreage, are about 10 to 11 times the size of Manhattan Island, 170,000 acres. It's a major brine resource. It's in the top 10. As I mentioned, we're going to have a pre-feasibility study out in the next couple of weeks. And what's important is this project is 100% owned by Lake Resources. You can see images of our drilling and also our pumping where we've sent samples forward. All right, so we've got the right size project in the right location. But what are we doing that's different? If we look to slide 8, this is what we're doing that's different. We're using a new disruptive direct extraction technology. This is a complete game changer in the industry. It's more efficient. It removes lithium directly from the salty water from the brine without using the industry-wide evaporation process. It's sustainable. It's got a much lower, smaller environmental footprint. But best of all we do is we pump the salty water into a tank for 2 to 3 hours. The beads that are produced by Lilac work like Pac-Men. They hook onto the lithium in that water, and then we can just release it back into the aquifer beneath the surface without changing its chemistry. And so the beauty of that is you automatically produce a high purity product because you're not concentrating any of the impurities. You don't have acres and acres of evaporation ponds, that's the plant itself. And so you're able to produce a product more efficiently and more quickly. Our next slide, slide 9, is a schematic just trying to show roughly what that looks like. Pump out from beneath the surface into a tank, that's an ion exchange filter. In the space of 2 to 3 hours, we produce about a 6% lithium input, 60,000 ppm, and that can then go into the back-end lithium carbonate plant, whether that's on site or at a separate location. At the moment, producers use the power of the sun, but it can take 12 to 24 months to produce rather than a few hours or a few days. It's going to be revolutionary, and we're the first company to work with Lilac, to have a pilot plant, and to get this underway through our partnership with them. So go on to slide 10. While it's good to be in the right location and good to have a new process, you've still got to be at the low end of the cost curve. All of the brine companies are down in the gray area, down the low end of the cost curve. It doesn't matter if we're producing widgets or lithium, you've got to have it at a low cost, and it's also got to be a high purity, a product that people want. And on the right-hand side are just the specifications. I won't go through those now, but the key thing that battery makers look for is that you've got low impurities. Basically, if you're at the low end of the cost curve and you've got a product that people want, you're always going to have business regardless of what's happening in the sector. On slide 11, I show where we're up to at the moment. So our technology partner, Lilac, has been expanding a pilot plant. We're using the first modules at the moment in California, in Oakland, and we're processing brines that we've shipped from the Catchy project to Oakland. We'll continue to produce samples there, albeit slowed up somewhat by COVID-19, but we continue to produce samples there for off-takers, and the idea is to engage with those off-takers to assist then in the financing of the project and ensuring its economic viability. On the right-hand side is just a vial, essentially what lithium carbonate looks like bags of fertilizer of white material. The trick, as I mentioned, is high purity and low impurity. On slide 12, I want to add something which is a bonus. Right, it's good to have new technology and be producing from the right part of the world, be at the low end of the cost curve and have a high purity product. But on top of that, there's a benefit of this being a sustainable process. The Bill Gates-led fund saw exactly the same way, and they have been backing Lilac. They were recently part of a Series A round of 20 million to support Lilac. And also in the last few months, we've seen BMW, Volkswagen, and Daimler come out actually seeking a more sustainable product in the supply chain. So that means that this is a product that the tier one battery makers and the tier one electric vehicle makers actually want in their supply chain. As mentioned previously, you can't do all this if you haven't had people working in these jurisdictions previously. Myself and Nick Lindsay and Robert Srebsky have worked in Chile and Argentina for many years, developing projects on operations. Stu Crow has been in the capital markets for more than 25 years. He's owned broking houses. And so there's some gray hair there, some experience, but still young enough to want to do things differently. And we've got a great little team on the ground as well. So if we just look at our timeline and what we aim to be delivering, the key thing this year, as mentioned, in 2020, is to get this direct extraction pilot plant producing samples, get them to off-takers for qualification purposes so we can engage with them, and then later moving that pilot plant to site. That'll help us finalize the current finance discussions, the 10 to 20 million US, which we're currently holding to finance this for the next couple of years through to construction finance. And then looking forward, production in 3 to 4 years' time at a normal rate of 25,000 tons per annum, but the chance to expand this significantly. A lot of catalysts this year. Just quickly on slide 15, we did a capital raise in February and raised money at that stage, so we're fine for now. As I mentioned, we're also in discussions for a structured debt product to finance this through the next couple of years. But we do have a relatively small market cap of about 15 million US. Now, please don't get concerned about the fact that there's 670 million shares on issue. That's just a function of how the ASX works. If we're in North America, you would just drop a digit, that'd be 67 million. But fundamentally, this is pretty normal, and we're expecting a major uplift associated with catalysts this year and next. To that end, on slide 16, we show a quick comparison with peers. Naturally, all companies have suffered a reduction in market value through the recent disruptions in the market, but we are still very well placed versus our peers and also the size of our resource. And as I mentioned, we recently got research out that showed a price target of 25 cents, which is about 6 to 7 times higher than where we are at the moment, based on the trajectory for the next 12 months. So there's plenty of upside here. So then quickly, in summary, on slide 17, what are we doing and where are we going? What are the key catalysts? Why would you look at a company like this? We're producing high-purity lithium carbonate from new technology. We're going to have samples out to off-takers soon, and that's really going to drive a lot of interest. We saw a lot of interest earlier this calendar year when our technology partner was financed by the Bill Gates-led Breakthrough Fund, and that has helped us continue the conversations with a financing for the next couple of years. This is a pilot plant with new technology. It is disruptive. It's going to change things. We'll have our PFS to show that it's economically viable out in the next couple of weeks with a production target out a few years' time. But best of all, we're going to be producing a product that the market wants at a low cost to generate a premium price because the industry, the electric vehicle makers, and the battery makers are looking for high purity, sustainable lithium, and we can deliver that. All right, so thank you very much for your attention. I'm now going to hand over to the questions, and we'll run through some of those. So one of the first questions we had is whether there's enough water to extract lithium and whether we own the water rights. So how it works in Argentina is that you have mining leases, and those mining leases then give you access to the aquifers beneath the surface. In this case, although we have mining leases, we need to finish a feasibility study, an environmental study, and receive approvals for development of the project. But there's more than enough liquid here, brines, to be producing not just for 25 years, which is what our PFS is going to say, but for 100 years. And the best part about this process is that all we're doing is we're taking the lithium out, that's that less than 1% of the water, and we return the rest to the aquifer. So thank you for that question. Another one is how quickly are the current samples going through the pilot plant? This is a very valid question and something that all of our investors are interested in. Initially, we had expected to see those samples coming out probably at the end of this month or very early next month. That's being pushed out. We're going to be updating the market in the next couple of weeks once we get some clarity from LILAC. But suffice to say that over the next 2 months, we'll be pushing those samples out of the pilot plant modules in California and getting those into the hands of the downstream users. We've also had a question about the impact of the COVID-19 pandemic. We've made some announcements to the market about this. So the advantage that we have is that because we're not in construction at the moment, the impact has not been as significant as perhaps on other participants. It slowed activities both in California and in Argentina for a couple of weeks. But now, because we're considered an essential service in the industry, both in extraction and the chemical industry, we have been able to continue work both on-site in Argentina and in California. This just involves a reduced workforce and a higher amount of personal protection equipment and also very strict guidelines on safety. Naturally, health and safety of both our teams and communities first and foremost, but we've been fortunate to be able to continue with the activities. As I move forward then through a couple of other questions that are here, just trying to make sure this thing refreshes. Sorry, just a moment. I'm trying to look at a couple of the questions that have turned up. So look, I really want to thank you all for your attention and for your questions. You can always email me on Steve, S-T-E-V-E, at lakeresources.com.au, and we're happy to field questions by email. So thank you so much for your time, and I think our time is up now. And so I'm going to hand back to the moderator.
Thank you. Ladies and gentlemen, this concludes today's webcast. You may disconnect your lines at this time. Thank you for your participation.